Richard has this chart where, and it says Canadian households are not delevering in the same way as other rich countries. And you have a bunch of countries from around the world, the US, the UK, Japan, China, and all these countries. And some are delevering, and Canada's debt load is not. Why do you think this is? And the chart is household debt as a percentage of GDP.
Yeah, so I think there's like a technical reason and sort of I think that the answer is there's a technical reason and sort of a philosophical reason. There's a philosophical reason. The philosophical reason is we have not had enough pain. And also, if you look closely, you can see the US and Spain are two examples I would cite.
Okay.
And you can see they had a massive, massive run up.
Yeah.
And we both know what happened, or we all know, I guess, what happened in Spain and in the United States.
Yeah.
They had a housing bubble crash, full on, and a complete 180 in their psyche with respect to, so there was literally debt was, written off. So loads of people went bankrupt. The housing market went bust. Loads of debt was written off. Banks went bust, et cetera, et cetera. And just be clear, this is relative to GDP, right? So there's a numerator and denominator component. So debt in nominal terms hasn't gone down. It's just the economies have grown bigger, right? So that's how you would get, for this number to go down, you either need the numerator to rise quickly. Anyway.
Yeah. But you're making a good point, because Canada, maybe we just haven't grown our economy.
Right.
We haven't grown
so
our
that's
GDP.
it. So that was
okay.
So you nailed it. So you have debt divided by GDP. So if you keep your debt, your numerator stable, and your denominator, your GDP rips, which is what happened in the United States, you have this line come down.
I never thought about it like that. Yeah, got it.
But in Spain, you'll notice that the decline is the most dramatic of the countries I've had here, because their debt, not only did their debt fall, their economy rose. So that's why you have such a in Canada, you have a situation where our debt remains stable, but our economy is not growing well enough. Because again, we have lack of productivity growth, and our population has now stalled. Population growth is now stalled. So people say, "Oh yeah, we have," Mr. Macklin Governor Macklin will say, "Oh, we expect to have a 1% growth in GDP." That's anemic. You know what I mean? Because that's terrible.
That's really good.
Oh, sorry. Go ahead.
Okay. No, go ahead.
I was going to say one quick one, because I know I often go on. Sorry. Then there's a technical reason why I don't think the debt has come down. It's because the debt servicing rate, when you service your debt, you have a capital component and an interest component. And because the Central Bank of Canada told everybody that interest rates are going to be low for a very, very long time, a whole whack of people went into variable mortgages. And when interest rates rose, the banks, in order to avoid defaults, allowed people to lower their capital payment component and increase their interest component. That's also a function of how lots of mortgages work anyways, but there was a bunch of shenanigans. And so you can see that
because we saw amortizations over 100 years.
Yeah, that's bullshit. They should never been allowed to do that. And so what you saw is you saw the capital repayment component stall out a little bit. And so that's I know maybe that's a little secondary effect, but but
that's good. I never thought of it this way, because you know what? I've always thought of it whenever I speak to some of my US friends, our interest rates in Canada for real estate are always lower. So in my mind, I'm like, we're able to just carry more debt, because whenever they tell me their rate is going to be, if they say 4%, usually we can get 3 to 3.5. If they say 5, we're 4.5. So in my mind, it was always we just can borrow more because our rates are lower. That's how we're able to have more household debt for so long and it all not blow up. But I really never thought about what you said, the GDP, the denominator not growing. Wow. So that's why I don't like to hear that at all.
Yeah. So, it is, sorry, to be crystal clear, it is growing. It's just very, very slow.
No, I get it. Yeah, absolutely. Yeah. Okay. So I want to skip back because you have so much good data here.
This fall, the Empire is back, but so is the Resistance. On Saturday, October 18th in Mississauga, it's the Your Life, Your Terms event, Ontario's most energized gathering of real in-the-trenches investors. This is the Resistance in action. One day of real strategies, fresh ideas, and new allies who believe in living life on their terms. The lineup, out of this galaxy. Ben Rabideau with the sharpest real estate and economic data, Tom Karadza on global forces reshaping Canada's future, Nick Karadza on the money revolution changing finance forever, Dave Butler with 5 game-changing investor mortgage programs, a powerhouse panel delivering blunt, on-the-ground real estate insights, Tom and Nick on launching and scaling income streams for freedom, Dr. Caitlin Link on taking control of your health and fitness. Past attendees call it a must-attend, electric, and say they've walked away with tens of thousands of value from a single day. Ticket prices rise as the event gets closer, so the earlier you grab your seat, the more you save. Some tiers include extra bonuses you don't want to miss. So the question is, will you sit back while the Empire makes it harder for everyday Canadians to get ahead? Or will you join the resistance, take your seat, and rise above the system? Go now to yourlifeyourtermsevent.com and grab your ticket before it's gone. That's yourlifeyourtermsevent.com before ticket prices rise. If you're a Rockstar member, your ticket is free.
Yeah, we talked about the inflation. You have this this chart that says Canadian headline inflation rose to 1.9% on a year-over-year basis in August, up from 1.7. And so I just wanted to ask you, and I think we kind of covered this one, that we're basically cutting rates in Canada into a market that looks like inflation might rise from here. Assets are already at high prices. Real estate has been more sensitive to interest rate changes, so real estate is maybe not at its all-time high. But if you look around kind of the world right now, a lot of things are, groceries are expensive. The S&P 500 in the US is at high levels.
Yeah.
And now Canada's cutting rates and the US is cutting rates.
So I want to make it clear that I would say that it's not the consensus. I'm like, when I say that I think inflation is going to tick higher, I would say I'm in the minority. I would say a lot of people, I would say a fair number of people and a fair number of smart people don't agree with me there. And so I think it's important to know that that's not like a consensus view. I think that that's me. I have some models, never fall in love with a model, but I have in my models that tell me that inflation could very well go higher. So that, and that's, has nothing to do with tariffs or anything like that. That was already sort of on its way, especially. And then if you add situation, I mean, there's lots of things going on. So, but that's my view. But the other thing is, what I want to say was, if Canada had a dual mandate of full employment and inflation, then I would argue that it would make sense for the Bank of Canada to cut. We know unemployment just had 2 negative months in a row. Employment declined 2 months in a row. The unemployment rate is at 7.1% and likely to rise. There's contractions in employment ratios and participation rates that should be quite shocking to people. And so from that perspective, it would make sense. But we're not. That's not their job. Their job is not to worry about the full employment piece.
Do you think it's just unspoken then? Like, is it unspoken that we do have a dual mandate?
I think it's a lack of independence from central bank. They during COVID, they demonstrated that. I mean, at one point they had absorbed, 92% of all of the debt issued.
You still have that as a pinned tweet. You have that as your pinned tweet.
It's my pinned tweet.
Yeah, I know that. I look at it every once in a while. Yeah.
It's been there for years, and I refuse to take it because that's that's the bullshit. We always hear like, oh, they're independent, and I submit to you that an independent central bank would not have absorbed 92% of 87.5 or whatever percent of the debt issued between March of 2020 and 2021. And people say, oh, I'm heartless because we were in a crisis. But I don't agree. I think that's central banks should not be funding a central government's wish list. And that's what I think is ultimately that's like when you pull up, when you look under the hood and you think a little bit more cynically, which my boss Keith is trying to train me to do, my thing is that Tiff Macklin's basically providing cover for the for the central government to run these massive budget deficits.
Yeah, that sounds accurate to me.
And that's not his job. It's just not his job.
Yeah, you're like such a nice person because that's not his job, but I think that's exactly what he's doing. Like, I feel like you are a nice person because you're so nice. Because honestly, I just mean that genuinely because you're like, well, he shouldn't be doing that. It's not his job. And I think he knows exactly what he's doing. And what he's doing is what he thinks his real job is. It might not be his public facing job, but I think
I guess people might fairly call me a hawk. But if you go to the other chart, can you show me the
Which
other
one?
chart, the one with negative real, the one that I always
Oh
show
yeah,
with
yeah.
the
This one.
colors?
Yep. Yep.
Yeah, so people say, "Oh, Rich, you're a hawk. Canada needs lower interest rates," and I submit to you that we do not need lower interest rates to have solid growth. What we need is higher interest rates to demonstrate to people that they need to invest in productive assets and not play a real estate game, which is basically what's been going on for the last 15 years. And you can see in this chart, you
I
have
would
the
agree. I just wanted you to know that I agree with you 100% on that statement. Like 100% on that
but.
statement. I just have such a lack of faith in the central bank of Canada, the Bank of Canada, that to me, I'm like, oh, I know what they should do. They never seem to do it. So they're going to do what serves, the current government's needs to recycle this debt,
Yeah,
and that's what
it's
they're
bullshit.
always going. It's bullshit. But I'm just decided many years ago now. I think my decision was like in 2012 when they had low rates after the great financial crisis, and I was like, okay, like I get it, lower interest rates, we got to save everything. It's going to be like a catastrophe. And then by 2012, and they kept the rates low for longer. What? And then the 2013, 2014,
Yeah.
real estate prices in Canada. We were out in the Hamilton when we started on the Hamilton Mountain buying rental properties in 2008. We were buying fully detached 3-bedroom homes with a driveway up the side for $225,000. Then they hit 250, and we're like, oh, whoa, whoa, whoa. And then somebody on our team came to us and said, oh my gosh, like no one can afford these things anymore.
Yeah.
And then the interest rates stayed low, and they had 275, 350, 450, 5, 6, 650. They got all the way up to some of them to like 900. Now they're saying,
but Tom, it's math. If you when you have interest rates that low or negative in real terms, you basically
agreed.
These are not benign decisions. This is the thing that drives me crazy. There's always trade-offs, and what these negative real interest rates are doing are trading off that it is a perversion. It distorts in number. There's like a bunch of reasons I can rattle off the top of my head. Number one, it distorts investment decisions. So negative real interest rates basically allow this misallocation of capital. You're basically telling people that the money is free.
Totally.
And when you give money, money is free, then it's misspent. The second thing, so that's related to the second thing, which is that it encourages risky behavior. People just do the math in their Excel spreadsheet and go, well, if inflation's 2%, I know, and then you encourage that speculative behavior, and then it sort of turns into a flywheel. The other thing is that it erodes savings, so it disincentivizes people to save, right? So instead of encouraging people to save money, and savings, if you want to be a real nerd about it, equals investment, right? So the money that's saved is what people then use to invest in things. And so that's a problem.
Which is capitalism.
Right,
formations of capital.
Right, exactly. So then it also weakens the currency, right? Because all things being equal, you want to invest like people.
So you're coming to my side. I hear you, and I think you're coming to my side. You're coming to my side.
The most important thing, though, the most important thing that people don't understand with this insistence on low interest rates, and in our case now negative real interest rates, is that it is effectively a transfer of wealth from working people, the labor class, the hourly worker, to the asset holder, the rich owner class. And you say, how does that make sense? Well, because effectively, only rich people and old people own assets. And so by putting interest rates lower than they otherwise normally would be, you are basically pumping up those assets. Now you can make the case it made sense in 2008 and 9 in the US specifically.
Yeah.
But to do it for 10 years and now to do it again, it's bullshit. No wonder Canada has a productivity emergency.